All right, y'all. Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. And today we're here with a weekly overview. All right, we're here with a weekly overview. So, you guys have any questions whatsoever, you guys can unmute yourselves and you can ask the question. Just make sure you raise your hand so that way, everybody know that they can move in order. What I'm gonna be doing today, guys, is really just putting you guys in position to take a look at some pairs that can potentially go in certain directions throughout the week and what we could really be expecting. All right. Also, if you guys want me to look at certain pairs for you, then I will definitely do that also for the people that are on the call. If you see this recording, you might somebody may ask a question that you want to ask, and you may be able to get the answer based off of that when I respond. Or if there may be something that I may be explaining that you probably never picked up on before, on either my past sessions or just this session in itself. Um, yeah, I just want to make sure that I put you guys in the right position to win. And I will explain, my style of trading and what I look for. Also, so hope you guys stay along for the ride. Stay patient with me, and then we'll be through it shortly. All right. With that being said, let's get straight to it. So, let's go and let's see. I think somebody had a question. All right, cool. Everybody's good now. Um, First things first, we're looking at gold. Gold is one of my favorite pairs, gold, silver. And those are like my two top favorite pairs. I do, like to trade those a little bit more than anything else, but there are times where I stay clear, right? And that's something that you really do have to understand. Sometimes it takes you staying clear on certain pairs, even if they move swiftly in a certain direction, because you kind of just want to be on the outside looking in to just know what you could be expecting by the time that you actually get back into that trade or get back into trading that particular pair, I should say, right? So, first things first, we're going to look at this, right? When I get to the markets, what I do is I either go to the daily time frame or the 4 hour time frame, and I mark off the major levels. All right. So if I was to go to the daily, we can actually remove this weekly time frame off of here. All right. If I go to the daily time frame, right? The things that I'm doing is I'm marking off major levels of where price had major jumps from. So we know price had a big dip from here, right? Price stopped here, dropped to the downside, and then rose above that level. So that's also a major level in the market. Price had a big move here, and then price also had a big move to the upside coming from this particular level in the market. All right, so those are I like to do two to three at most, right? Sometimes four may have permits itself for me to do that, but I mark off two to three major support and resistance zones that are in the market. After I do that, what I do is I go down to the 4 hour time frame, right? And this is my favorite time frame. Out of any time frame that's on that's connected to Forex, the 4 hour time frame for me is the best one. It gives you just the right amount of data, but it also allows you to see the full potential of a move that could potentially happen. So that way you actually can you know chase it. Well, not even say chase, follow the trend in its right direction. All right. So as of right now, okay, cool. I see prices working in between both of these levels, right? We're having a major drop, right? This is something that I would like to call a parabolic move drop to the downside. You don't want to chase these moves in the market for the simple fact that they're moving fairly swiftly and quickly at the same exact time. You know what I mean? Like you want to stay clear. You want to take trades from these from very key levels, right? And the key levels that I like to mark off, right? Of course, is the support and resistance, right? STR. Then I only like to take my trades from these levels, right? You have order blocks, all right, which stands for OB. All right. Then you also have what? Fair value gaps. All right. And these are the only levels that I'm actually taking trades from. All right. Fair value gaps. And then you also have structural zones. All right. These are the major levels that you only, the major and key levels that you should only actually be taking these trades from. If they're not at either of these levels, there are no reason you should actually be taking a trade for the simple fact that you will be taking a trade basically in space, right? And space has no form of structure, right? If you really think about it. And then think about it, is space even real? I don't know, right? You got conspiracy theorists that may think space isn't real. You got people that think space is real. Who knows, right? But taking trades in space can put you in a bad spot, right? So, Gary, why wouldn't you took this sell to the downside? Why wouldn't you do this? Blah 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 blah, right? Well, there was absolutely no form of structure in the past because this is a new high in the market, right? Price made a new high. For me, there's no reason for me to take this sell in a complete uptrend, right? We want to follow the trend. So, and unless price breaks a previous high, like it did here, right? It broke a previous higher low in the market. Then that's when we could be, setting ourselves up to potentially see price retest so that way you can fall back down eventually and you can be on the right side of the trade, if that makes sense, right? So, the only time I would be comfortable taking a sell in something that was moving in a clear-cut uptrend is if it actually takes out a higher low. All right, it has to take out a higher low for me to feel comfortable to actually take this trade, right? When it decides to potentially fall again. All right. So let me put that there. All right. And before I actually get into the meat of things, let me take a step back. All right. Again, like I told you, we only take trades from these levels and we only trade with the trend, right? We only trade with the trend. We do not trade against the trend whatsoever, right? Whatsoever. Now, um, here's the thing, right? You have a market where it makes consistent higher highs, higher lows, higher highs, higher lows, higher highs, right? Higher lows, so on and so forth. All right. Every time the market creates a new high, all right, what's going to happen is price is going to find us a level to actually retest to. All right. And then when it breaks this previous high that it actually made and creates a new one, this is when it kind of we set ourselves up to potentially take a trade, right, in its proper direction. So we want to see a high get broken to create a new one for then price to retest back to an area of value beneath the breaker structure. All right, beneath the previous high. So we want to see price fall back down near the support or beneath the breaker structure to show us that price is going to come back to one of our three levels. All right. Now, the two levels that are beneath the breakup structure is an order block and a fair value gap. If I'm in an uptrend, right, and I'm looking at this market, right? If I'm in an uptrend and I'm looking at this market, um, create this new high and pull back. What is an order block in an uptrend? An order block in an uptrend is actually the last deepest down candle before price actually decided to break structure. All right. So it's the last down candle before price decided to actually break structure. All right. And I'm going to show you which order blocks are more significant than others. All right. So bear with me. All right. I'm going to show you the particular order blocks that are more significant than the other ones. So now, when price does that and it retests, price is always going to find one of these three levels. In this case, let's say price found an order block, right? It found one of the last down candles before price decided to break structure. Now, when price gets to this level, what you want to see is bullish candlesticks. Why? Because price has shown you that price wants to move to the upside. All right. What's the common denominator when you're thinking about going up? If you know that the market is going up, why would you want to look for a bearish candle at your area of value? It makes no sense, right? You will want to find a bullish candlestick actually closing above your area of value so that way you know that that is confirmation that this actual zone is going to hold up so that way you can take the trade back towards the high. All right. Now, what will your SL go when you're taking these trades? Your SLs will go beneath the areas of value that permits themselves, right? Naturally, what that is going to do if you're taking these trades at these proper levels is it's naturally going to give you the great risk to reward ratio that you need to be a successful trader, right? Because you can win 30% of your trades and still be profitable. You can win 60% of your trades and still be profitable. You can win 20% of your trades and still be profitable. Why? Because of the risk to reward factor. All right. So let's say we come here, we see a bullish candle actually close above our order block. We take our trade there, right? What you would do is you'll place your SL beneath your area of value, right? And you at least want to go for a 1-to-1 to a 1-to-2 most of the time. Sometimes price is going to permit you to go for a 1-to-3, but you consistently want to go for a 1-to-2 or a 1-to-1. All right, what that is basically if my SL is, let's just say for instance, let's just say let's ignore these two numbers. Let's just say my SL was 20 pips. All right, I'm going to want to have at least a 20 pip gain. All right, that gives me my what? Your 1-to-1 risk to reward ratio. If I want to go for a 1-to-2, what's 20 plus 20? 20 plus 20 is 40. So that means that I need to raise my take profit to 40. So it gives me my 1-to-2 risk to reward ratio. Right now, if price happens to break below your area of value, you know that it was actually meant to happen. All right. If it does so, that just means price is going to continue to run in the other direction, right? Sometimes there are cases where price might reach a certain order block and then it might break another order block to potentially find a deeper zone below this point so that way it can react so that then it could actually go up higher. Now, here's the thing with that. That's when you actually catch re-entries. You don't just catch re-entries just by entering the market again because you lost. No, you want to wait for price to get back to another deeper level so that way you can look to actually take the trade back in this proper direction. Why you may have lost that trade, it may go into timing. Your timing may have been off. All right. The trade just might actually just be looking to actually change its trend and go in a different direction. Those things are possible, right? Um, and they happen, right? We got to be understanding and knowing that those things happen in the market. Um, at one of the key levels. So all re-entries are taken at one of the key levels. That's where they should be, right? Key levels should actually be, I mean, re-entries should be taken at deeper key levels or deeper areas of value. So let's say, for instance, this order block was a little bit higher, and there was another order block a little bit lower than that one, and price decided to bypass this one to go to this one. If you entered the market up here because it gave you that confirmation candlestick, right? If it gave you that confirmation candlestick and then price happened to go below that point and hit your SL, it may be looking to actually go back to this deeper order block that may be down here or a deeper fair value gap that might be down here. So that way you can actually take the trade back above this high. All right. So boom, this happens. You make your money. You go about your day. All right. Let's say price ends up breaking this high. That gives you your breaker structure. All right. BOS. Boom, boom. All right. You get your breaker structure. All right. Price creates that new high. You wait for price to retest. And let's just say, for example, price came back to a fair value gap. Well, Gary, what is a fair value gap? A fair value gap is space in between three candlesticks. So you have a candlestick here, and then another candlestick right above that one. You have to understand these candles have wicks. So that first candle has a wick. That second candle has a wick. It may not. But then that third candle also has a wick at the very bottom, right? If that last candle and the first candle wick does not meet in between the body of the middle candle, then that gives you your fair value gap level. So let's say price came back to this particular point, right? And it was our fair value gap level, right? Again, it's the same thing with the order block. You want to see bullish candlesticks, you want to see rejections come from these levels. All right. That's what you want to see. All right. You want to see candlesticks close above these areas of value because then when that happens, that's your confirmation that you can actually enter these trades. All right. You enter the market, SL goes beneath that point, and then you're aiming towards your high. Does not mean you have to go towards your high, doesn't mean you have to go past it, right? You really need to be aiming for a 1-to-1 or a 1-to-2 risk to reward ratios at the very minimum. All right. So, same thing goes. You catch your entry, SLs will go beneath your area of value. It gives you an opportunity to let your trade actually breathe, so that way then you can actually take the trade right and be okay with drawdown. because drawdown happens. You're not going to go into profit immediately every time you get into a trade. Get that out of your mind. I say that a lot. Get that out of your mind. It's very much so not a thing. All right. It's very much so not a thing. Okay. Um, right. It's very much so not a thing. You are going to be in positions to where trades are going to test your patience. And just because they test your patience does not mean that it's not going to go in your direction. It may take some time for that to happen, especially if you're looking to actually be this type of trader or any trader for that matter. If you're a swing trader and you want to become a swing trader, think about that, bro. That allows being a swing trader allows you it allows you peace of mind, to be honest. Right? I done every style of trading. Swing trading allows you peace of mind and it allows you to live your life. I want everybody to give your honest opinion based on me when I send signals. If you see my signals or you see when I call out trades or just in general, or even when you're on a call with me and I'm
Hey,
you
Denzo.
I'm sorry. I think Miss Joanne, you said something?
Oh no, I hit the wrong button. I'm sorry.
Okay, okay. No, but I just want everybody to give me their observation of what you think. I don't spend hours at a time on the charts anymore. I don't do that. There's nothing there's no reason for me to do that anymore, right? What I do though, right, is I live my life. I spend time with my family. I spend time with my nieces, right? I go out and enjoy myself, spend time with my friends. You know, different other avenues that I might like to get interested in or might do, then I have time to do so. Does not mean that I'm not focused on my skill set because I've been doing it for a while now, right? It allows you to live your life. Swing trading allows you to still be able to make money and capitalize on the amount of money that you can make while still doing other things that you feel like you can do. There are people that be like, right, you and trading can put you in a position where you might not even have to work anymore. But if you still want to work, you still can do so because there's still people out there like that that still want to have a job, right? It's nothing wrong. It's nothing wrong with having a job, right? I want to put that out there. It's nothing wrong with having a job. If you feel like you still want to have a job and you love the career field that you in, but you want to make more money, then do trading. If you solely want to focus on trading, then do that, right? Trading allows you to live your life. I'm able to do what I want when I want. If I want to go get a job, I can. Do I need or want to? No. Would I mind doing it if it works for me? Yes. Because it allows me to still be interactive and still do things that I would normally do on a daily basis. You know what I'm saying? To you know, do what I want. You know what I'm saying? Like I said, this is not you don't have to be held hostage by the charts. You don't have to be held hostage by the charts whatsoever. And whoever tells you that, I'm sorry, they lied to you. Right? Now, if you want to be successful in this and you're at the very beginning, you're going to have to put in time. That's about the only time you really should be actually be holding yourself hostage and putting the time in. But even then, you don't want to overdo it, or overwork yourself, or overdo things. Like for me, when I was starting off, I locked myself in a closet for days. Sometimes, like I said before, on some of my cars, I wouldn't leave my closet. I would stay up days at a time. There'll be times where I'm like, bro, snap, I gotta take a shower. Like I'm tripping. You know what I'm saying? Like I gotta do something. All right, let me focus in. All right, how live life for a little bit, then come back and work. You know what I'm saying? Like I want to outwork anybody in this skill set, and I want to outwork anybody just anybody because that's how I was even before trading. So. I just wanted to put that down and let you guys understand and hear that because I just need you guys to hear that, right? So scalping, I notice always keeps you looking at the market versus time away from the charts. That's very much so true, right? Too long only because I like to be present or monitor my trades. I can't walk away and not monitor my trades yet. And that's okay, so I'm glad you said that because I know I'm gonna get back into the lesson and we're gonna look at some trades that we can take. All right, just be patient with me, y'all. I like to be very thorough when I go through certain things, especially when it comes into trading, because you got to be very thorough. All right, so Miss Ramona, I pay attention. You are one of the most, if not the most, consistent student in the community. I just want to give you your flowers with that, number one. But I also want to tell you this. I want you to work on this. I want you to work on this, and this goes for everybody. Um, it's only one or two things that can happen in the market when you enter a trade. It's either gonna hit your take profit or it's gonna hit your SL. And I wish somebody could tell me that at the very beginning of my trading journey. One or two things are going to happen. You're either going to win a trade or you're going to lose a trade. But you're never going to know the full potential of your skill set or what you're doing until you're able to do those two things. Win a trade, lose a trade. Set a TP, set a SL, and go about your day. Trust me. Trust me. You're adding extra stress on yourself, right? You're adding extra stress on yourself when you're sitting there trying to monitor a trade. One or two things are going to happen. The market's going to go one or two ways, right? Yes, it's cool to go once the market hits TP1, you can go put your SL at break even. Cool. That's what I would always suggest. Once it hits TP1 and you know you're going to TP2, what you do? Place your SL at break even once it hit TP1 and then let the trade do what it do from that point. At least you lock in your profits. But you know what I'm saying? Like moving your SL and putting yourself in position to where you're not even truly maximizing the trade in itself can could put a hindrance on your journey or a hindrance on the amount of money you really could make. You know what I mean? So I would always suggest just let it be. Let it be. One or two things is going to happen, and you got to be okay with it, right? You got to be okay with it. Growth comes from that. Trust me, I've experienced it, and I still be at times where I be like, I want to get out this trade, but I got to stay in. I got to stay in, right? If it hits my take profit level, then cool, I'm out. I'm done. And go about my day now, right? If not, here's my SL, so what? So be it. Oh well. Right. So that's the market in a brief synopsis when it comes to me showing you guys this. All right. There may be other scenarios that may happen, right? Let's say, for example, price didn't come back to a fair value gap level, right? Let's say price came back to a structural zone. Price broke structure, it retest back to the structural level, right? Let's say price stopped here. All right, that's your structural level in the market. Price came back to that particular point and gave you what? A bullish candlestick closing above. What you would then do is what? Place your take profit, place your entry at the end of the candlestick that closes above your area of value. You place your SL beneath your structural level and you aim towards your highs. Or you aim for your 1 to 2 or 1 to 1 risk to reward ratio, right? And you go about your day, right? What you guys are going to start noticing is it's going to naturally put you in positions to where your risk to reward ratio is spot on, right? And that's what it's about, right? Uh, at the very beginning of my career, when I first got into trading, everybody was talking about sniper entries, catching trades off of wicks, blah, 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 blah. Cry me a river. Cry me a river. Who cares about a sniper entry? Find a proper entry for your trade. Take that trade, right? Stop trying to be extremely perfect when you catching these trades off of wicks. Because then sometimes you may catch a trade while a candle is actually moving, and then boom, It goes straight back down, it'll go straight back up. Please wait till these candlesticks close. Wait till you get that confirmation from the proper candlestick that you're supposed to be seeing. So that way you can take the trade and be cool with what comes with it. You know what I mean? Like, come on. All right. Boom. You catch your trade, you aim for your highs, you go about your day. Or you aim for your risk to reward ratio. All right. Now, these candlesticks also have what? Patterns. Or not candlesticks. These markets also have patterns. You have market patterns that are like double bottoms. Then you also have ones that are, right, triple bottoms. And then not only that, but you also have, right, market patterns that show you an inverted head and shoulders, right? This is an inverted head and shoulders. These three patterns actually starts uptrends. All right. Or they can be continuations. All right. Now, let's say, let me adjust this for a quick second. All right, I'm gonna adjust this for a quick second just so I can show you guys this. All right. So let's say we invert the screen. You guys remember and heard of what you do on one side, you can do on another. The same thing applies for the market. So if I was to invert this screen for a second, the very way that I could attack the uptrending market is the exact same way that I can attack a downtrending market. All right. All right. Now, like think about that. Just like you have double bottoms, now you have double tops. Just like you had inverted head and shoulders, now you have a head and shoulders. Just like you had a triple bottom, now you got a triple top. All right. And then just like you had price creating higher highs and higher lows, now you have price creating lower lows and lower highs. All right, lower low, lower high, lower low, lower high, lower low, lower high. All right. Now check this out. Once price takes out a low, it's going to create a new low for price to pull back to in what? One of the three areas of values, whether that's a what? Whether that's an order block, a fair value gap, or structural level, price is going to find one of these three levels every single time. And that's one thing that I can definitely guarantee you when you are looking at the market. Every time price pulls back, every time price retests, it's always going to come back to one of these three levels. I can guarantee you that I put my last dollar on it. All right. Now, Gary, what's an order block and a downtrend? An order block and a downtrend is basically the last deepest up candle before price decided to break structure. All right. It's the last buy candle before price decided to actually break structure. So price creates the new low, it retests, it comes back to one of the last up candles before price decided to break structure. We want to see bearish candles, not bullish candles, because that goes with uptrends. We want to see bearish candles close beneath our areas of value. So that way we know that we can actually take a trade to the downside. So it'll be something like this. You take your entry, candle closes, second. All right, candle closes, you put your SL where? Above this point, above your order block or your area of value, and you're aiming for your 1 to 1 or 1 to 2, or you can be aiming towards your low. Either or is fine. But what you're going to realize is that it's going to always put you in position to have great risk reward ratios and be able to maximize your trades, whether you win or lose. All right. Price falls down, it breaks structure. Price retests back to a structural level. All right. I'll get to your question in just a moment. All right. Give me 1 second. All right. Price is going to come back to that level. All right. And then what is it going to do? It's going to look to be closing beneath your area of value. We want to see bearish candles closing beneath. We want to see rejections coming from this level, right? And just like I told you guys with the uptrend, right? Just like I told you guys with the uptrend, there may be times where price may come back to these levels and it may go into profit and then it may turn around and knock you out this trade just to go find a deeper area of value back here. Those things may happen. All right. Unless a trade actually takes out a previous lower high point, then you know that the trade is still moving towards the downside. All right. That's what I want you guys to understand. All right. Now, who raised their hand? I know somebody raised their hand. What you can do right now is you can actually come off of mute. All right. Come off mute and ask your question. Who was it? I'm not sure who it was. I know
It
somebody.
was me. It was me. Hi, thank you.
You're welcome.
So my question, and I think you kind of just answered it.
Yes,
It
ma'am.
was you referencing when we're looking at a downtrend,
Mhm.
um, it's about looking at the type of candles that are forming to confirm that we're going to continue on a downtrend.
Correct.
What was that statement again?
Okay, so basically, I'm gonna go back over it again, so that way we can get it, and you can keep your mic unmuted. It's fine. You're good. So basically, when price decides to break these lows and creates a break of structure, when they create these newer lows, what price is going to do is it's going to come back to these areas of values like your order blocks, your fair value gaps, or structural levels, and we want to see candlesticks actually close beneath that level. All right, so the candle actually has to close beneath it in order to give you your confirmation that you can actually enter the market. Then what will happen after that is as you take your entry, your SLs will go above. So that way, then you can actually take the trades back to the downside. All right, because you already know you're moving in a downtrend because price actually took out this lower low, right? It took out a lower low point. Price created that new one just so price could pull back, just so it can continue to trend. All right, so let me know if that answered your question. All right, and I see Miss Linda has a question also, but I want to know if that answers your question, Miss Jones.
I'm sorry, I did mute my phone. So, okay, okay. So when you see that it takes out the break of structure where it actually creates a higher high and goes past that previous, like
Mhm.
it breaks the structure and creates a higher high or a higher low.
Right. In this case, we're in a downtrend, so it'll be
Okay.
breaker structures, right? It'll take out the previous low to create a new one, so price can create a new lower high. And naturally, what this does is it makes you it puts you in position to take these trades at the new lower high. All right, because these are the lower high points. All
Okay.
right, these are the lower low points.
So if it doesn't go past that break of structure, you got to wait until you actually get a
Candlestick confirmation.
okay.
Yes, ma'am.
Okay.
And
Mm-hmm.
I'm gonna go over live examples too, and then we are gonna go over the overview. Like I'm also gonna put you guys in position to actually, you know what I'm saying, check some trades out for the week. So, you know what I'm saying, we're not done. We're nowhere near done yet, but I just wanted to put the market into perspective for you guys before we actually get into the you just for showing you what I'm doing and why I'll be looking at certain pairs like that. Okay. Um, so is everybody's good for right now? I know Miss Linda has a question. You can go ahead and ask your question, Miss Linda.
All right, could you hear me?
Yes, ma'am.
I know this may be a little bit beyond because you don't really use much of the BAS block, but I was wondering, as the BAS block on your trading view, could you do like an example and put the BAS block on there?
Okay, so
But if you don't use the BAS block, I would understand that too.
here's the thing.
Okay.
The BAS block is basically an order block.
Yeah,
So when I'm explaining the order block, I'm basically
that's
talking about the BAS block. That's really all it is.
okay.
All right. So here we go, right? Let's go into the market, and what we're gonna do is I'm gonna go over that, right? I'm gonna show you guys the BAS block is really it's like it's an order block. Some people call it supply and demand, but here we call it BAS block. That's neither
So I
here.
think that's just getting me a little confused. Okay. All
Yeah,
right.
that's
Thanks.
neither here, but it's all the same thing. All right.
Okay.
So let's go find we're gonna look at this uptrend first, right? How do you know that an uptrend is actually going to be into play? How do you know you need to be looking for that an uptrend is actually starting? All right, now we're looking at the real chart, right? This is an educational slash overview of what we could be expecting going into the coming weeks, right? But I want to break this down for you guys so everybody's on the same page. All right, so all right, we know that the market obviously was moving in a downwards motion, right? It decided to break this level of structure here, right? Which normally shows you that price is then going to create a new low to retest, in which it did. But what ended up happening is when price came back to these levels, it dropped, and then price actually did what? It broke above this particular level in the market. And because it did that, this will be identified as a lower high actually being broken in the market. All right, because it did not go back above this particular high. All right, and this was a previous high in the market. Price did not go and break this high, so it continuously made this was a lower high in a sense, right? So what ended up happening is you got your breaker structure, right? Like we explained, this is an uptrend. All right. Let me click here so you guys can see here. All right, you got your breaker structure. Price creates the new high, right? When price decides to retest, remember I told you it's going to always come back to one of the three levels. In this case, when price decided to pull back, right? Let's zoom in for a second, right? It came back where? Remember I told you guys there are such things as fair value gaps, order blocks, and structural zones. Can anybody tell me? You guys can type in the chat for those that may know, where did price actually come back to? All right, because I explained it in the written example and I will explain it now, but I want to see if people actually know where price actually decided to retest to before
A
it can.
fair value gap.
There we go, Miss Ramona. I think that was Miss Ramona that answered that. But yes, it came back to a fair value gap indeed. Okay. I want to show you guys that this works. This is a consistent method that I use in the market, and I call it the power of three. All right. So let's look. Let's go. Right. Remember, I told you guys you got a one candle here, another candle here, and another candle here. This candle's wick stops here. This candle wick stops here. But you see how there's a space in between the body of this candle, right? These wicks don't meet. And if those wicks don't meet, that allows it to be a fair value gap. So from this candle's wick to that candle's wick, that gives you what? Your fair value gap level. All right. And if we see what happened when price came back to that level, it rejected off of it. All right. And then eventually what ended up happening? Normally, what this is a news candle. I can tell you that because I've been in the market for a long time, but this is a news candle right here. All right. And that's why it did what it did at this particular point. Normally, what will happen is you will see candlesticks close above actually the body of the zone in itself. But because this was a news candle, the moment that you could have got this bullish candle closing above this zone because of this wick rejection, you could have entered the market down here. All right. You could have entered the market after this candle closed, right? Your SLs would have been beneath the wick, and then you would have been taking the trades back above your highs. And what does that do? It naturally gives you your 1-to-1, right? Risk to reward ratio. If you want to go for 1-to-2, you guys see how price goes and attacks that 1-to-2 risk to reward ratio factor. Okay. You take your entry, SLs goes beneath your fair value gap in this wick, and then now you take a trade for a 1-to-1 or 1-to-2 risk to reward ratio. As you see, price gets hit. Now, what ends up happening while it's doing that, price decides to break structure again, right? It takes out a previous high. All right. This gives you your break of structure. All right. In this case, when price created this new high and price decided to retest, can anybody tell me what price actually came back to? All right. And I'm about to explain and tell you guys what makes other zones stronger than the next. All right. So what area of value did price come back to? Let's see. Let's see who's been paying attention, right? All right. Miss Linda says structure. Anybody else? It came back to okay, we got structure, and that's hey, let's go. Who else? Let's go. We can be interactive, guys. Don't be scared to answer. That's how you learn. You can be wrong. It's okay. That's why you're here. All right. Yosef said OB. Michael said Baz block. All right. There we go. Anybody that said either two of those answers are correct. All right. Because it came back to actually both. All right. And let's put that into an example. So now, when that happens, I want everybody to remember this. When price comes back to both an order block and another area of value, whether that's a fair value gap in an order block, or order block in a structural level, or a structural level in an order block, or a structural level in a fair value gap, and they're near each other or on top of each other, those are extreme magnetized areas, meaning that they are extremely strong and price is going to react off of that level. All right. That's how you know if other order blocks or other areas of value are stronger than the next one. All right, because they both coincide with each other. So boom. From wicks to bodies allows you to get your structural level, right? But then at that structural level, what do you have? You have one of the last down candles before price cleanly broke structure. All right. So that gives you an order block. Boom, boom, right here. Excuse me. All right. Boom. You got your order block level and your structural zone right on top of each other. All I need to see is a bullish candlestick closing above both of them. If I can get that, what you think I'm doing, right? I'm buying the market. My SLs are going beneath my zones, right? And I'm aiming towards my highs, or I'm aiming towards my 1-to-1s or 1-to-2 risk to reward ratios. All right. What ends up happening? Price goes into the negative. But when you give your trade opportunity to if you give your trade room to breathe, you can be able to, yes, deal with drawdown, but still turn around and make money. That's when the patient kicks in. That's when patience kicks in. You know what I'm saying? So, yes, when areas are actually right next to each other or right above or right below each other, that makes that area in the market extremely strong. Again, like I said, you will go into profit sometimes as soon as you enter a trade. Sometimes you won't. This is a perfect example. And then what happens? Price closes above again. You take the trade back above your highs, or you aim for your 1-to-1s or 1-to-2 risk to reward ratios, and you go about your day. You don't have to place freaking 20 inch. You don't have to trade 20 times a week. You don't have to enter the market 20 times every week. You don't have to do it. You don't have to do it. You can enter the market 2 or 3 times and still make the same amount of money as anybody else that is trading or entered 12 trades. You can enter 3 and still make the same amount of money they make. I guarantee you. Okay? So you make your money, you go about your day. What ends up happening? This is the same thing that I've shown you guys on the examples, right? The market doesn't do anything different. It doesn't do anything different. You got your breaker structure. You got price creating that new high. What does price retest back to? This is no joke. You can't make this up. From wick to body, right? What does that give you? And what is that level? Before I even change the color of it, what is that level? And I need everybody. It's just about 12 people on the call. I need 12 responses before I even open the chat box. Where did price come back to? Where did price come back to? Everybody has to answer in order for us to move on. Everybody. Need 6 more. All right, 3 more. Two more. Come on, let's go. Last two. What y'all doing? Let's go. Wake up. This is the only way I'm moving on. I need one more. Who that last one? They sleep? What y'all doing? All right, we're good. All right, structural level. Price came back to this structural zone. All right, STR. And what type of candle did look at that? Why don't you look at there? Price gave you a strong bullish candlestick closing above that structural level, right? What happens? You enter the market. If that high happens to be close to your entry point, and sometimes that may happen, then just simply go for your 1-to-1 or 1-to-2 risk to reward ratio. And you don't necessarily have to worry about going towards your high, right? You don't necessarily have to do that. SLs will go beneath that point. Go and you make your money. Aim for your 1-to-1 and you be cool. Right? Make your money, you go about your day, move on to the next trade. You feel me? Everybody good? Y'all see that, right? That's a perfect example of what I just basically went over with you guys. So now let's go over a downtrend and then after that, right, for the last 30 minutes, what we're going to do is we're actually going to go over some trades that we can look to be expecting coming up. All right. So for the week. So let's go look at a downtrend. All right, let's go look at a downtrend in market. And we're gonna look at it with a different pair. Let's go to shoot. We can go to look at XPX. I mean XRP. It works for everything. I kid you not. Right? So let's go look at XPX. I mean XRP. All right, XRP is the same thing. All right, I do some of the same things with cryptos as I do, with Forex and metals as I do with cryptos. It does nothing changes, right? It's all the same thing. We reach a level in the market. Remember, I told you guys about market patterns, and when they identify to let you know that they're actually getting ready to change a trend, they're going to reach a particular level in the market and create these patterns. Can anybody tell me this pattern right here? If you've been on a call with me, you should easily know what this is. If you've been on multiple sessions with me, you should easily know what this pattern is in the market. All right. Double top. There you go, Miss Ramona, right? You got a double top at a major resistance level in the market. Price obviously stopped here in the past, right? So now when that happens, you see that yes, the market was moving in an uptrending motion, right? But how do you know price is going to go down to the downtrend? What happens here? It takes out a higher low. This was a higher low. This was a higher low. Price end up doing what? Taking out that point, making this a new lower low in the market, right? And then when price decided to retest, where did it come back to? One of the deepest last up candles before price actually broke structure, right? And that is our what? Our order block. That entire buy candle you mark off, right? You make it your order block zone. And as you see, no candle closed above, but you do have candles closing below. What you think we need to be doing? Take your SL there. Take your entry there. SLs will go above this point, right? And then what are you doing? You're going for what? A 1-to-1 or a 1-to-2 risk reward ratio, or you can aim towards your low. Don't mean you have to go all the way to there, but you can aim towards your low. Okay. Everybody sees that, right? And if you notice, yes, you go into profit, price jumps, then it retests, comes back to entry, right? Sometimes this may happen. This is why I always say hold the trade until it gets to the point. If it don't get to your point, you should not be worrying about what's going on. Let the trade do what it's supposed to do. All right. But let's just say we're going for a 1-to-2. We're going for our 1-to-2 risk to reward ratio, right? Money's made already. But let's say you want to go for a 1-to-3. You was feeling yourself a little bit, right? Let's say you was feeling yourself a little bit. You wanted to go for a 1-to-3. Price does one of these moves on you, pull all the way back here, and then what? Drops again, hits your take profit. All right, remember I told y'all what? Price is then gonna what? Break structure. It's gonna create new lows, right? It's gonna create new lows for price to do what? Retest. And where did price come and retest to? Why don't you look at here? It came back to one of the last up candles before price cleanly broke structure. All right, lower low, price retest, back up to that order block. Right? Does that mean we have to go all the way down here and aim for that? Absolutely not. You don't have to. Right? You can simply just go for your what? Go for your risk to reward. You got that bearish candle closing beneath. You take your entry. I'm sorry, I chose the wrong one. You take your entry. SLS goes above that order block. Take profit goes where? For a 1-to-1 or a 1-to-2 risk to reward ratio. How do you know if it's a 1-to-1 and a 1-to-2? You just simply look at the numbers here. All right, it's gonna give you a 1-to-2, and then you have your 1-to-1 right there. A whole one, and then you have a whole two. That's how you know you're properly aiming for your 1-to-2 risk to reward ratio when you're entering these markets. All right. Everybody see that, right? So boom. Because then there may be times where price may not go to these lows. It may not happen. It may not happen. Right? That's why it's always key to just go for your 1-to-1, 1-to-2 risk reward ratio, make your money, go about your day, go have fun, go do something. Chill out with your girlfriends, chill out with your homies, chill out with your kids, with your nieces, your nephews, whoever you got to do, go kick it, live your life. Let the trade do what it's supposed to do. All right. Everybody see that though, right? If everything that I've basically explained to you up until this moment has made sense, what I want you guys to do is type a PO3 in the chat. All right. Type a PO3 in the chat if everything that I've explained to you up until this moment has made sense to you. If you have questions still, type a one, right? Because then there might be something I might be doing wrong. You can go back, you can back test this. It works on every single pair. I just showed you. We're all the way on the crypto, and we just did the same thing that we just did over with gold. All right. So now what we're going to do, because I got those responses back, everybody got it, right? Everybody understands what we're doing. Now we're at the time of the session, guys, where we basically go look at some trades to see what we could be expecting for this week. All right. So if anybody would like to type in the chat or say some pairs that they actually might want to look at, please type them in the chat right now, and we will do so. All right. All right, EA, Euro AUD. All right, bro. Good, good. We got some of us want to look at that. We will look at that. Euro AUD. All right. Let's take a look at Euro AUD. All right, now. Euro AUD is acting a plum fool. It's doing its big one. Euro AUD is acting a plum fool. All right, so if I'm looking at this, let's just go back to the daily, right? Let's go to the daily time frame. Let's put this on a higher time frame, right? All right, so all right, cool. All right, so what I do first, right? Again, I go find major rejection points in the market, and I mark them off. All right, this is a major level here. Price made a big jump from that point. Price made a big jump from here. All right, you can slide that all the way over here if you wanted to. All right, we see price touch three levels at once. Right, what then happened after that? You have touch here, touch here, touch here. What could this be? What market pattern could this be based off of the daily time frame? Want somebody to tell me what market pattern is that? We went over it, and I might even draw it for y'all, but some of y'all may get it even before I do that. Draw it out. Triple bottom, triple bottom, triple bottom, not triple top, triple bottom. All right, so we got GJ and GN. I'll go look at those two. But we're gonna stay focused on this one for right now. I want to make sure I put everybody in position to understand what they could be expecting. This is a strong impulsive move here and also here. So what you could be expecting with GB with Euro AUD, right? This week, right? Especially the start of this week, you're going to be expecting to see price drop. I'm telling you right now. Based off of these impulsive moves that's going on in the market. Is the market still in an uptrend? Absolutely. The market is clearly in an uptrend. But what you could be expecting, right, in the market when it comes to Euro AUD, because if we come here, right, and we just simply marking off the charts based off of hold on, based off of structure from here to here to here to here to here to here to here, right? And it right pushing here. What you could be expecting is price having a deep pullback back to near this level. All right, near this entire level. All right, based on what we should be looking for, and it might do one of those. All right, price may pull one of them. Second, our battery low on the computer, so it's gonna die in just a second, but it's all good. See how much battery got, a little 9%. All right, so I'm gonna go over this real quick. So you might see this. What I'm gonna do is I'm gonna remove this and I'm gonna slide this over. Right? You might see one of these moves. It might come back right here to this zone right here. You see this order block right here? It might come right back to this order block because there's also a fair value gap sitting at that same level. And we know that this is also a structural level in the market as well. Right? So you got an order block, right? And you got fair value gap right here, right? From here to here. Look at that. Right? So there's a great chance, but also you have a structural level that's also here. All right, so you might get one of these numbers, right? Price coming from this particular point in the market. Let me delete that, and we might get one of these numbers. Dog, I keep doing that. Hold on. All right, you might get one of these. Boom, boom. All right, that's what you could be expecting for Euro AUD. All right, now let's go look at GJ. I think it was GJ, right? I think it was GJ. Somebody said GJ. I'm mistaken. Yeah, GJ and GN. We're gonna look at those real quick. GJ, GBP, JPY. All right, and GN. GJ. All right, based on what I'm looking at for GJ right now, is it's actually I'm gonna clear this chart off real quick. All right, so it you kind of have to really kind of be patient with GJ right now. It gapped, and because it gapped down, what you could be expecting is for price to push up for to possibly continue to go to the downside because it also did break structure here. All right, and we're naturally already moving in a downtrend in itself, right? So from here to there, all right, it's clear cut downtrend. All right, you got your downtrend market right now. Um, Nothing screams up to me at the current moment, other than this move that might just happen, so price can continue to fall down. Naturally, what you end up getting right here is, like I said, you get your break of structure. price gapped down to the breaker structure just so we can retest, right? What you could be able to see here is price coming back up near this level here. All right, back up to this order block, right? And there's also a fair value gap right underneath that order block from here to here. All right, so price could definitely come back to these levels right here. All right, and it can pull one of these numbers. All right, we of course we see price doing what it's doing here, 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 boom, 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 boom. Broke structure, price comes back. You can see one of these numbers happening, so price can possibly go lower. All right. And if it goes lower, what's going to end up happening is price going to take out this particular low on the backside here, right? So that's something that you could be expecting when it comes to GBP JPY. Now let's go look at GN. All right. GN is pushing right now. GN typically follows whatever really GA is doing. If anybody wants to know that, like whatever GA is doing, whatever EA is doing, GN and EN are typically doing the exact same thing. So again, like I said, I mark off my major levels in the market where I get big jumps from. You get price breaking here, and then what happens? Price broke structure of this high to retest. So it's clear as day that we're moving in an uptrend. Price came back to this fair value gap here. And that's the reason why price actually had to jump from that point. You end up getting a close above, and then what price continued to buy from that particular standpoint. So now what you see is you see a breaker structure here. All right, you get that breaker structure. Now what you want to see is price pulling back. All right, when price pulls back, because there's an order block on top of this structural zone, price could pull back to this level, all right, or continue to push higher just to pull back to go higher. You know what I'm saying? So that's what you guys could be looking at when it comes to that. We'll see how many better. You got 7%. All right. So, right, you got the double bottom, right? Price respected it. You end up getting a double top, some form fashion, but it continued to respect the overall trend, right? Price pushes up, comes back down, and yeah, you see what happened to price up from that point on. So what might happen is, like I said, price may come back down to this level, right? Just so it can actually push higher. All right. And that's the overview, technically, basically, right? Anybody else if anybody understood everything that I basically just kind of went over and noticed that I didn't even have to, do too much. There's not too much I really have to do to really determine what I really wanted to see or what I should be expecting. So, um, again, right, you get the breaker structure, price create that double bottom. And now because it created this double bottom right here on a 4-hour time frame. Like I said, when price decides to retest, and what it's gonna do is gonna retest possibly all the way through half of the week. Then come Thursday, Friday, or Friday in itself, that move going up might happen. All right. So, you know what I'm saying? It's gonna pull one of these numbers. You got your double bottom, push up, comes back down near this level just to go higher. All right. And you got to understand and know what's at this level. There's order blocks here. There's a fair value gap right here. All right. So that fair value gap might be a factor from there to there. All right. Price might come back to that level. And what's at that level as well? There's structure at that level as well. All right. So, like I said, you might get that push up for that push to come back down near this level to price go back up higher. All right, that's what you should be expecting. Everybody got it? Everybody good? And yes, Brendan, a week of mitigation. You may get that at the end of the week that you may get that move to actually then go to where it's really supposed to be going. Then going into next week, then price probably is gonna continue doing the same thing. You know what I'm saying? So that's pretty much it with the session for today, guys. I went over all the pairs that you guys wanted me to look at. Um, I'll keep them here on my red list. so I can keep you guys in tune and up to date with those. But with that being said, though, right? I just want to say, guys, I appreciate you guys for getting on the session with me. What I want you guys to do is I want you guys to go into the community, or even people that's even outside of the community, and let them know about the session that you had today, right? Let them know about the session you had today. This recording is going to be on my YouTube channel. All right, I will be posting this, and I'm also going to post it on my Instagram. So on my Instagram story, so you guys can have a link for that. But I also am going to, and so if you're not following me, go follow me on Instagram. Follow me on Instagram, Gary Scott Official, my first and last name official, and then follow me on there, and I'll drop the link on my story when I do upload this video for this session. All right. I might even drop the link in the community. Who knows? I don't know. I gotta see. But for the most part, it will be on my Instagram. And if you guys just go on my YouTube channel, you can subscribe so that way you get notified when I do drop the video. My Insta, I mean my YouTube is the Silent Pip Assassin. The Silent Pip Assassin. All right, that is my YouTube channel at the Silent Pip Assassin. You'll be able to find it. I have a multitude of videos on there that you guys can watch. But with that being said, today, guys, that'll be the end of this session. Do me a solid. Go leave a comment in the community. Go leave a comment on the video when I do drop the video and let me know how you felt about it. With that being said, guys, I love you guys. You guys have a great rest of your week. And I'll see you guys soon on Thursday, right? My next session will be on Thursday. So I'll see you guys then. I hope you guys have like I said, a great remainder, rest of your week, right? And let's kill it. All right. With that being said, it's your boy. I'm out of here. Peace.